are doing well, and we're going to be looking at another 4 stocks that you have chosen for us, members of our free Facebook community, buy, grow, sell strategy for share traders. If you're not part of this community yet, take a look at the details how to access this community at the description below. The interesting fact is that 2 of those 4 stocks are trading a technically discounted price, right? One is in particular is very interesting right now. I like to highlight this. Not every single stock that is trading a technically discounted price is a buying opportunity. In fact, most of stocks that are falling, they are falling for a reason. And sometimes you're just catching a falling knife, right? So you're just gonna be careful. That's why we normally look into the fundamentals to see whether whatever reason they sold was impulsive, was a sell-off generated by short sellers, or so we try to understand. And also the macro outlook. How could that impact into the business that we are analyzing of this particular company? And the other 2 stocks, now, they are trading at the FOMO level, completely opposite. And we normally avoid trading stocks or buying stocks at FOMO levels, but still there is what we call momentum strategy, that you can be buying a stock at the FOMO level, so nearly at what we call not technically discounted price, but at the technically fair price, and take it through the retracement and buy on the retracement. So if that's the case, we're now looking at those 2 stocks, where could be the retracement level, and if I was going to buy using momentum trading strategy, where would I be placing the order? So we're going to be sharing with that as well. So let's have a look. Remember guys, this is not a financial advice, it's just from BG Trading, sharing with you how we apply strategies to know when to buy and when to sell stocks, how we place our stop losses, our targets, risk assessment, and much more. All this information you have by becoming a VIP member. So if you're interested to have access to all our trading setups for 20 to 40% profit within 1 to 3 months using very tight stop loss, just take a look on our website bgtrading.com.au and find more information how to sign up and our prices. We've done a lot of great trading results, just like this one as with Zip. If you are a VIP member in April, you would have got access to this. This is what our VIP members received. The full trade setup with the targets, the entry details, and that obviously before we buying. And then obviously we bought around $1.55, 57, and we sold this month for 182% profit. It was another incredible trade. And as these ones, we have many others like a Northern Star, which we have also recently locked in about 39%. So real trades with real results, $30,000 just there, which is another really nice trade. Only 6 weeks on this one. And again, if you were our VP member in 4th of August, you would have received this information when just before we buy, and you could have taken action and locked profits this last week when we sold Northern Star. Thanks to this huge gold rally, which was we have been anticipating. So that's happened exactly how we wanted. Anyway, so if you like the content, please subscribe to the channel and share this video with someone that would be interested, right? Now, let's take a look at the first stock, which is trading at technically discounted price. The ticker code is REG, REGIS Healthcare. I think this stock, based on the chart formation, based on the fundamentals, it is a buy opportunity right here a technically discounted price. Now, let's understand why it is a buying opportunity. First of all, the technical aspect. Trading a technically discounted price below this pink and red line right there, and has recently fallen about 35%. Okay, so we're going to find out why REGIS has fallen about 35% in pretty much a matter of a couple of weeks, right? Provided that it has been trading extraordinarily well in this uptrend, right? And normally when we have those disruptive sell-off in a stock that has been trading in a really good uptrend, depending on the news, it could bounce right back right quickly. And if they happened, by only bouncing towards the long-term moving average, we'd be talking about 50% profit. And if it bounces towards the short-term moving average and goes back into the uptrend, that will represent 30% profit. So this is interesting, and is it right time to be setting up the trading, because as you can see here, this was a huge fall, and then the downtrend, the short-term downtrend has lost momentum. Okay, and that's exactly where we wanted to pick up the trade. Now, if you're going to trade, obviously you got to have a stop loss, and this when trades allow us to put a very, very tight stop loss. In this case, I'll be talking about giving or taking 5%. If I'm going to chase, not all the way up, but if I'm going to chase about, say for instance, 28%, I will be placing 5.6%, which is incredibly great risk reward, right? Now, let's quickly understand why has REGIS healthcare fell so much in the last couple of weeks. So essentially, the government has announced an increase of aged care funding, officially a 4.7 lift to maintain daily care rates and hoteling supplements. That's essentially what happened. However, the company came up with an announcement on 22nd saying that funding is not enough to cover the costs, and that means actually uplift of only about 2.6%. At the same time, higher staff wages, and that will be eating up most of the hoteling boost for aged care. So REGIS came up with this announcement. The funding is going up, but for the company, it won't be covering the cost of the inflation. So then investors freak out and end up selling the whole damn thing. And then obviously the stock has had this 35% crash. Obviously, the material impact we wanted to see over the full financial year. But what I wanted to show you here is that it is has been 35% the risk from this, and I think there is a little trade set up there for the short term, which could at least give us about 20% if applying correctly BG trading strategy. Once again, something like this is very possible, even if it falls further. Okay, even if it falls further. So there you go, about 20% at least. So we're talking about 28% range, tight stop loss. I think there's a buying opportunity there around $6 level, and but with tight stop loss at 380, 375 level, that could be a very interesting trading setup. So REGIS healthcare, a buying opportunity. Another thing I wanted just to highlight before finishing REGIS healthcare is that they have been improving its fundamentals year on year, right? As you can see here, they came up from about $20 million loss into $40 million profit last financial year. So they are improving its fundamentals. It's not a company that is shrinking like the next one we'll be talking about, Domino's. Just to summarize, buying opportunity, very tight stop loss. Let's see how it goes. Now, next one is Domino's. A lot of analysts are currently looking at this stock and saying, oh, this is very, very cheap. But analyzing the business itself and brings again, if you don't want to look into the report, doing a very high level analysis, just go to, don't gamble, just go to ASX website and take a look what's happening with the company, revenue and profitability over the last few financial years and see if there is a solid growth or if there has been declining. And that exactly what happened with Domino's. First of all, let's face the profit towards revenue, it's very low. It's not the best business model in my opinion, anyway. But hospitality is extremely tough with inflation. Domino's always been branded as a cheap pizza, and going to be a tough 12 months ahead. They are going to be cutting costs, as it was announced in the last financial report, in order to potentially keeping to a breaking even level. That's my goal, my take in there. Look, could we potentially try a trade here? I honestly rather not, just because I understand the nature of this type of business, and I think they might have a worse FY26 ahead, especially because most of the elements that compose this business, the franchise business and the franchisees, they will be struggling, and we might see a lot of close downs around the world, not just Australia. So I honestly don't like this. If I was to buy this particular stock to potentially speculate a short squeeze, I would wait for a base first and or a strong reversal candle. We haven't seen that. There's still a falling knife in my opinion, even though this RSI, a short-term RSI, looking a little bit like a bullish divergence. It's it's too soon. We're talking about less than a month on this RSI. So I will leave for now. I'll put on my watch list. Okay, I think it could easily go towards $10 still, and nothing from the fundamental side make me excited to buy Domino's at this stage, and either from the technical aspect. Now, we can argue that macro could improve a little bit, but in fact, macro is making inflation and overall costs to run business even higher, which again, it's a red flag for Domino's. So I'll pass on Domino's watch list, but I will pass. So I think from those two stocks, REGIS Healthcare will be the one to speculate a buying opportunity for the short term. Okay. Now let's talk about EOS, Electro-Optic System Holding. This has gone up like crazy, right? We didn't trade there. We missed the rally. Okay. Now it's highly overpriced. If you look into the fundamentals of this particular company, they're not any good. Only generating about $176 million revenue. Obviously, they came up with some good contracts recently, and there's a lot of hype in the sector, and they are giving or taking, improving its net loss. Potentially even become profitable this year, but the price has already rallied. That's the thing. It has rallied from like $1 to $10. That's 10 times. 10 times, and highly stretched. Look at the distance between the long-term moving average, the SMA, 250, towards the share price, 300%. That's extremely in the formal levels for me, and I will pass. I'm not interested to get into this particular stock right now. Now, as I mentioned before, the retracement here we have to come with a test of this short-term moving average right there. As you can see, the red line, okay? And then I'll be buying on the red line potentially for a double top formation. That's where I would be buying, right? Say hypothetically, if the rally was finished now, right? So we will be looking at about 30%, 26% fall, okay? Which we could take it up another 30% profit, 40% profit for a double top formation. Would I do this trade? Maybe I would, maybe not, depending on the market circumstances and depends on the hype of this particular sector. So it could fall in, it's just a stock that is prone for short traders once this hype goes away. So you just gotta be careful about short selling emerging from these super high levels right there. Okay, again, like relatively weak fundamentals is not that great. It's overpriced, highly overpriced fundamentally and technically. It's just a stock that I'm not interested right now. And the last one we're going to be looking at is EMYRIA. Is that how you say it? EMYRIA. EMYRIA Limited, which is another stock at the formal levels right there. Obviously, it's kind of bouncing from recent highs. I will teach you quickly how to set up the charts based on BGS20 strategy. Just go to settings, set up volume. Whatever your platform has, you gotta see the volume, right? And then you set up the moving averages as per BGS20 strategy. So we're talking about SMA 40, SMA 250, which we represent as pink line right there, right? And the EMA9 red line, exponential moving average. Why we use this exponential moving average? Because allow us to see whether the short-term momentum is at the bullish side or at the bearish side. Ideally, we want to be looking at stocks that have been most of the time into a bullish side momentum, meaning that candles are trading on above this yellow line right there. Hopefully that makes sense, right? So in this case, just making a high now, right there. I wouldn't be buying right now. I would be waiting at least for a 25% retracement. That's what we've been having before. So 25% retracement means this stock around pretty much close to this red line, which is technically fair price for the short term. That's where we want to be buying, okay? Any stock at the technically fair price around the lines or below the lines, okay? We want to buy value as well, obviously. So if I'm going to be looking at buying MRI, I would be chasing for 5 cents a share entry, the next retracement, okay? Obviously understanding what's happening behind the scenes, you can see that MRI has a very weak fundamentals, okay? In fact, it's been losing money every single financial year, at least over the last 4 financial years. And the revenue is not there. So obviously waiting for results and trials and stuff. So you just gotta be careful. It is a speculative buy, right? And you can always dig into, sorry, not here. It is speculative buy. And you can always dig into what's happening with the announcements here to understand what are the characteristics behind any share price movement, right? And if you're going to go in speculative trades like this, understand the fundamentals, understand what's the story behind the stock, not just the chart formation. Because if the stories change, the charts will change fairly quickly, right? Especially when there's no value, right? Just be careful with that. It's still speculative buy. Retracement would be right here at just above 5 cents level for me. EMYRIA Limited, not a buy, but a wait or a hold. Wait to buy at technically fair price, and a hold if anybody's holding. It is in uptrend now as we speak. Okay, that brings us to the end of this video. Hope that has been adding some value for you, and we will try go through another set of 4 stocks that you have chosen for us later on this week. Thanks for watching. I'll see you next video. Bye.